One thing about life is that the older you get, the smarter you get because you have the advantage of looking backwards to find out what went good or bad. The reality is, America has developed a pattern to say we, as average investors, should trust our money to financial advisors. Now, don't get me wrong, I have some very good clients and very good friends that are financial advisors, but I still give them a hard time. What I want to tell you is what drives financial advisors, and the key question I've asked for 41 years is why can't I pull out of the market and go to cash when every red light on my dashboard indicates the market is getting more risky, less opportunity for returns, and is it really wrong to take some profits off the table? Well, I can just tell you right now, it's like Warren Buffett says, price is what you pay and value is what you get. The other thing that you got to remember, it's no different than investing or going to Vegas. You might have a really, really hot table of craps or roulette or blackjack, and maybe it was the right deck, the right time, the right table, the right players, but don't mistake luck or circumstances or timing for skill. One thing I've learned, because I do like to go to Vegas occasionally and I like to play roulette and the cards and the tables, I've learned that when you have a really good run, sometimes it doesn't hurt to take back your profits, back your gains, put them in your pocket and take a breather. But ever since I started in 1985 about doing investments, I've never in my career, ever, including my investors, my partners, my friends, my own account, I've never had a financial advisor or somebody in the financial services business say, you know what? The roadway ahead looks like it's full of potholes. In fact, it could be a derailment. I'm smelling that the market has shifted. The upside is limited. The downside is getting more and more precarious. We should put all your money in cash. We should go to bonds, CDs, money markets. I think we ought to take our powder, put it to the side, and sit tight for a few months and see how this all works out. The reason that happens, and the reason why that is not something that a financial advisor says, is they don't make any fees. See, their job is to sell you product, whether it's an annuity, a life insurance, stocks or bonds or ETFs or cryptocurrency or alternative investments. Their job is to make as much money for the firm and for themselves as they possibly can make. And the more money they make and the more assets under management, the more valuable their firm becomes. The thing is, I don't want to build a pyramid off your back. I don't want you to be in the trenches making those bricks out of clay and mortar and bringing them to me so I can create a bigger castle for my family while your family's sitting precariously overweighted in certain asset classes or being in the market at all. Now, I know this is going to draw a lot of fire and it's going to draw a lot of argument, but to be candid with you, it doesn't faze me in the least. I've been around financial planners for 41 years. I've got good friends that are financial planners. I have clients and investors that are financial planners. But the truth is, it hurts. If I'm really, really a good financial planner, and if I'm really, really doing what's best for my clients, I could care less if I had $1 billion under management and I thought the market had a better chance of going down than up. For the assets that I think are going to be directly affected, I would say, you know what, we're going to cash. You're not going to be happy for 4, 5, 6 months. You're not going to be happy for the period of time I believe the market's going to correct because you're going to make less than your yield. Here's the good part. I don't make any fees when your money's in cash. See, I'm moving you without any incentives to a cash position because I think it's right for you. That's called a financial advisor. I'm advising you that the runway ahead looks kind of dark. There's a curve in the road. I see something standing in the road. Could be a crash, could be an animal, could be another car, could be a ditch. Because I feel less comfortable going forward, I think the reward doesn't justify the risk of being in the market. So whether I tell you to go 20%, 50%, or 100% into cash is an indication that I'm doing what's in your best interest. Today, that's not the case. I have yet in 41 years ever had a financial advisor or anyone in the financial services say, you know what? The cards are not playing correctly. I just don't think with what's going on in the market, I should go to cash. So let's say I go to cash and I'm making 3.75% in the money market or a CD today, and the stock market goes up another 2,000, 3,000 points on the Dow. Well, that's 2, 3, 4%. Maybe it goes up in the next 90 days. The reality is that 3% worth losing 10 or 20%? You say, oh, no. I'm too smart for that. I'm going to call my financial advisor. I'm going to tell him to get out. I'm going to tell him to go to cash. Well, you're a day late and a dollar short. You've already lost 5, 10, 15% before you make the call. And then you're going to have to argue with that financial advisor about why now is the time to get out. Because his answer to you is going to be, you don't sell in a down market. Your stocks are down 5, 10, 20%. You got to hold it. It'll come back. See, there's never a right time. I liken cash as very simply an analogy that resonates with me as a guy in my early 60s, right? Cash is my gunpowder. Cash gives me the ability to shoot and fire at will in assets and opportunities that I believe are worthwhile. I don't know why financial advisors don't see the same thing. If the Dow's at 52,000 on the Dow today, and the Iranian war and the Straits of Hormuz don't open up and chaos goes back in, or maybe the tariffs kick back in, this thing could move 2, 3, 5, 10,000 points on the Dow either way. It could go up another 5, go down 15,000 on the Dow. But if I have the gunpowder, if I have cash sitting in position, wouldn't you like to buy the stocks you own today at a 20, 30% discount? You say, well, that's just not possible. 30% discount, we'd be at 35,000 or 32,000 on the Dow. Well, folks, one thing about having these wrinkles and being old, I've seen what happens when the market corrects, and it's a stampede for the exit. And when we had this happen in 2008, the last major financial crisis, the Dow lost about 55% in less than 90 days. I was in that market. I saw real estate drop by over 40, 50% in most markets. What you think can't happen, happens. But I saw so many opportunities that I could buy and invest in after the crash, but I was not smart enough to go to cash. I had a financial advisor. I had people help me manage my money, and not one person said, hey, there's a cliff ahead, which tells me what? They're not that smart. If they were smart, they'd have seen the cliff long before me, because that's their business. That's what they do for a living. They're professionals. So if I'm looking at how to manage my money in a chaotic world like we have today, I can't count on somebody who's never put their own money on the table. They make fees off of my money, whether I win or lose. Not a good situation to be into. What I want you to think about is how you define your end game, not their end game, your end game. Your end game is to what? Preservation of capital. Look at risk reward constantly, whether the money you have out in the market is worth the risk you're taking for the rewards you're going to get, and go with your gut instinct. I've done it many, many times over the last 20 or 30 years as I got older, more mature, and I didn't have a problem telling somebody who wanted me to feel foolish or stupid by going to cash. Do you know if you were out of the stock market 10 days out of the last 40 years, you'd have lost over half your returns? Yeah, what if I had been out of the market the 10 worst down days? I'd probably be up 35%. See, a story is just like a fable. It's like a storybook. The ending is up to me if it's a pretend story. It's up to me to decide how the story's told and how much inflection I make at any point during the story. What I want you to do is think about this. Financial advisors have their value for some. The richest people I know don't use financial advisors. They make their own decisions. I want you to make your own decision, determine what your own goal is, and define it clearly so you have no problem saying, this is what I want to do because my gut tells me that decision is the right decision.